Hi, I'm Gary Vaughter, and do you know who is the meanest creditor out there? It's not your payday lenders, it's not the loan sharks, it's the Internal Revenue Service. And if I were going to personify the IRS as an individual, I'd call him Guido, the tax collector. And there's one person in particular that Guido likes to go after, and that is investors that don't diversify. Now wait, I don't mean diversification across stocks, bonds, cash, and real estate. I mean people that don't tax diversify their portfolios. If he can take all money from a pre-tax account, it's a much higher tax than he can take it across the three other types of accounts. You have pre-tax, after-tax, and tax-free. First of all, you have pre-tax. We all know what pre-tax is. That's your 401k, your deferred compensation, your company profit sharing plan. After tax is what we like to call the Bill Gates wealth creation. Bill is worth about $60 billion and has yet to pay much at all in the way of taxes. And if he does, it's capital gains rates, which is probably half of his regular rate. And the third one is tax exempt. Tax exempt could be a Roth conversion, could be tax-free bonds. Now, let me paint a scenario how this plays out in life. Let's say that you and your neighbor are out drinking a beer, standing in the sidewalk. He's your golf buddy. And he's like, yeah, gee, Gary, isn't it great that we're both taking $100,000 out of our portfolio, living the dream, enjoying retirement? Yeah. Tell you what, Bob, I'll see you tomorrow morning, the first tee. Well, that night, Bob gets a knock on the door. It's Guido, the IRS agent. Guido says to Bob, my friend, I want to congratulate you for your retirement. That's a nice accomplishment. Tell me how you're going to pay for your retirement. Bob says, I have my 401k. I rolled it into my IRA and I'm going to take out all the money I need. Guido says, that's very good. That's all pre-tax. I'm going to make you a deal. I'm going to take 25% of everything you take out of your account for the rest of your retirement. And I'm going to continue taking 25% out for all of your kids or whoever inherits that money. You're going to like this deal. It's for my employer, the Internal Revenue Service. Bob's a little shook up. Next morning, you see Bob on the first tee. And he can't focus. He's jittery. Bob, what's wrong? He says, Guido from the IRS visited me again. He said he's going to take 25% of everything I spend in retirement, and then he's going to tax my family on it when I pass it on to them. You say, Bob, I told you should have called Vaughter Financial like I did. Vaughter Financial never has Guido visiting us. Because you see, I take $100,000 out of my portfolio. I take a little bit out of my pre-tax. Yeah, I send Guido and the IRS 15% of that. Then I take a little bit out of my after-tax account, but because I'm in the 15% bracket, my capital gains rate is 0. Guido's not really interested in calling on me. And the third thing is, I've got this conversion Roth, or traditional Roth IRA. There's no taxes there. Guido doesn't even want to visit me when he's got you paying 25%. Fellow investors, don't be a Bob. Learn how to create a tax-diversified portfolio. If you or someone you know would like to learn more about these and other tax savings ideas, please give us a call or visit our website.